So Northwest Airlines, we've been talking about airlines. Now, here's a classic example. Northwest was one of the first airlines that a lot of the big mutual funds in Boston discovered, and that was way back in 1960. But it was in 62 that the entire group came on. This being one of their favorites, of course, they came in and bought it all over the place. You had, I think it was 12 or 15 times increase, and it was one of the real leaders. But they took all of the airlines. Now, this is something that doesn't happen too often, but occasionally there'll be a change in an industry condition, and they take everybody in the industry. And this is what happened here. Every single airline, the $6 airlines went to 30, So the lower quality ones, the higher quality ones, the entire industry ran. It was because of jets and more travel and all. And you had to get through the market correction, but as soon as the market correction in 62 had a follow-through, Northwest Airlines is breaking out. And I was in the market at that time. I remember seeing the volume and the action, and we did buy some of these at different points. But the entire group was bought by institutions because of the increase in air travel. And you can see it lasted for a long, long time. Now, I can tell you that way back in that period, 62, 63, even when the airline stocks, in this example, say went from 9 to 46, going up 4 or 5 times, that the head of one of the biggest mutual fund organizations in the country that was fairly sharp, I'm talking about the founder of that, was still saying you got to buy the airline stocks there. Also, sometimes somebody like that's been around a long, long time will have certain points that they won't want you to buy something because they think it's out of position, but it needs to correct and build a proper kind of base, and then you can buy it later. Because I remember calling somebody up and telling them that I thought the group was pretty good and they should be doing something. And they said, well, the boss won't let us buy this or that. It had broken out at a certain point, but it didn't go anywhere. It went sideways for about 8 or 10 weeks, and then it came out. So every once in a while, the founder, the boss comes in and says, you can't do this. And there's usually some reason for it. Those things don't happen too often, but they do. And I've been at it a long enough time, I've heard just about everything that could happen. Nice cup of the handle in September 63, and you go up and you bounce off the line continuously until you have doubled, and then you build another base, and it's another cup of the handle, and that one is in the 64-65 period, and out of that handle you build a flat base. Then you go up, and now here's an example of a base that isn't exactly right, and the stage of the base isn't exactly right either. I'll go back and work into that. Let's say that you had your first breakout in 62, and now you have another base in 63, and now you have an ascending base in 64, and you build another base. And remember, this is the biggest industry move in the entire market. All the airlines are going crazy. And you keep going up and up and up. But now you get this base that is in 65, and it only corrects 2 weeks on the left-hand side down. And if you look at all the other bases, you had 1, 2, 3, 4, 5 weeks down on the left side, 1, 2, 3, 4, 5, 6, 7 weeks on the downside, 1, 2, 3, 4 weeks on the downside, and now you have only 2 weeks on the downside to June 65. And then the handle kind of goes flat, straight sideways. It's not drifting down and having a shakeout. So your handle is 1, 2, 3, 4 weeks. So you had this little deficiency in straight down for 2 weeks and then straight up for 2 weeks and going flat, not drifting down. That's not a proper cup with a handle. And you buy that breaking out, it goes up a little bit, and wham, it breaks from 47.5 to 36. So there's a 25% correction. First week down, 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 down. And you undercut the low of the prior one for a shakeout, and the wise guys sell short, and then it turns around and starts building a proper base and comes out of it. So here's an example of the late stage base, but the base itself was improper. I think most people would look at that and say, well, that's a cup with a handle. Well, yeah, it is, but the average left-hand side of a cup with a handle is 5 to 7 weeks. This one was 2 weeks. Now, that doesn't mean that some of them can't work with 2 weeks. If it had been a first or second stage base, but being a late stage one, and 2 weeks straight down and 2 weeks up, and then having a handle that did not drift down, that went sideways, it was all wrong. And if you bought it there, you paid for it by going into a real fast shakeout. And then you built a proper base that had 1, 2, 3, 4 weeks down. So the market kind of adjusts for somebody that doesn't know the differences. And if there's a deficiency in a base and you don't see it, you're going to get trapped every time. And sooner or later, in the course of a move in a big leading stock, you'll have that happen at some point. You know, it's just another loss, but if you make too many of them, then it takes away all your profits. I used to have a rule that if I bought a stock in a particular industry, I would want to be able to find at least one other stock that also was acting good in that group. Now, I've sort of forgotten about that a little bit, but I just like to have a little bit of confirmation, because most stocks are going to have 1 or 2, maybe 3 leaders in the industry, and the rest of them are just not going anywhere at all. So I always used to find at least one other one that's acting halfway decent. But occasionally you'll find there's such a radical change in the industry that they're all going. You know, jet planes, all of a sudden you're going 500 miles an hour rather than 250. It's quieter and more comfortable. And if you've ever been in the old prop planes, you're sitting next to the engines and they make a lot of noise. I don't think you see industry as a whole move except in some rare cases, but they will happen. Lower quality is going to be a $5 stock or $6 or $7 stock, and you might make some money there. But in the Northwest example, that was the quality leader in the entire airline industry in that era. They had routes not only in this country, but leading from up in Canada down into the Orient and all kinds of places. So that was considered to be a leader. And also the funds had bought this before the industry group. It was one of their favorites back in 1960, 2 or 3 years earlier, before the boom came in the whole airline industry. So this is one they had known and believed in before, and it had a better route structure, getting routes to Japan and things like that from, say, Montana. So that was considered a leader, and there were a few others that were leaders. So, yeah, you can find one company's got better earnings and better sales and it's acting better or got better sponsorship, even though they're buying almost everything in the industry. I think you start by building your own little set of models of what were the big leaders last year, what stocks went up the most, and then maybe had to go up at least 3 times before you look at them. And maybe you get 20 examples of these stocks that were the big stocks. And study those and see what are normal patterns and then what are ones that get into trouble. So that's one way to back into it. You see it's a 5th stage base and it did this and that they didn't do before. And you start by having a set of models of classic winners. Here was a 1st stage base. There was a perfect classical cup of the handle. 5 to 7 weeks down, 4 or 5 weeks up, and it gets to within 10% of its old high, and the volume dries up on the handle and it drifts down, and all of a sudden it breaks out like mad. So you have examples of what is classic and right. I wouldn't want to build a whole bunch of examples of bad patterns, because you want to learn to recognize the good pattern. If you really recognize a good pattern, you'll start to see one that, well, this isn't quite right. It's almost, but this isn't right and that isn't right, and that kind of thing, rather than learning what are all the bad patterns look like. I think that's kind of backwards. It's hard enough to remember all that and get it straight. Then you should see, well, this isn't really one of these goodies. It's almost but not, and it's almost but not, and this isn't exactly right. And then you get suspicious, well, it's just not right. And you'll recognize that if you know what a sound one's supposed to look like.